All
My
right,
background okay?
welcome. Yeah,
Hello.
your background. You look great. You look fantastic. You do not look like somebody who's doing two jobs at once.
It's a lot of Lemaire, my friend.
You you brought it up just before we started, and I'd be remiss if I didn't share this story. And it's a story that I've probably shared with a ton of people in the New York community. But we found ourselves in Madison Square Park in, I'm going to say, about July or August of 2009,
Yes. Yes.
and I was probably down to the last negative $30,000 in my startup. And you might have had to pay for me for lunch because I know my credit card maxed out right around that time. Actually, no, it didn't. It didn't max out until 2 weeks into me joining first round. So I might have been able to pay for my own lunch then.
I think we were both like starving and decided to split the check.
But we sat down for lunch at Shake Shack, and we had both been working on companies that did not turn out to be big outcomes. And we were really depressed because we felt like, as former VCs before this startup, we had no usable skills to offer anybody.
We were like, we're useless.
I mean, you said, who would ever hire us to do anything? You know, we proven that we couldn't sell, we couldn't build the right thing, VCs don't have any real skills to offer. But now all that has changed
That's right.
because VCs are builders again.
That's right. That's right.
And so tell me, you went public about a set of tools that you have built while you're an investor. And so, like, explain to me your pie chart and how this fits and doesn't work, and then we'll go into sort of what you built. But, maybe the why and from where.
Yeah, I think, it's 100. When people ask that question, I say I still have a lot of horsepower. But it's a lot. I think actually to build this startup, you actually have to actively be investing. So I'm a GP at RRE Ventures, co-founder, CEO of Originalis AI. I kind of thought about this a long time ago. I wrote a memo. I call it the operating system for venture capital in 2023. I'm kind of old school. Like you and I started in venture a long time ago, right? And as we remember, there's like a cottage industry, like 1,000 GPs in all of North America, right? I don't know how many there are now. Firms were very small and boutique in nature. And I think there's been a lot of growth, which is fantastic, but I think there's a lot of democratization, like a lot of new folks becoming managers, I think is great. But I think there's also a lot of commoditization. I think firms got quite bloated. And I think we sometimes forget the craft of the business, which is GPs working with founders under toughest problems. So ironically, I figured that we could return to the craft of venture capital by actually using cutting edge technology. The irony, right? I mean, strangely, our business invests in like the most like cutting edge tech companies, and we're kind of a file cabinet business, right? So it all dawned on me. I like thought I put the modules together in my head like 3 years ago. Like, how do you get better sourcing? How do you automate analysis and diligence and portfolio intelligence and even platform teams? I think could actually be software modules, frankly, and not in a way where you're building like a robo investment platform, but in a way where you're giving leverage and time back to GPs
Mhm.
to actually do the real work. So that kind of kicked off a series of like thinking and conversations with myself about like the next act. And the timing just felt like perfect, right? So I've been on this journey to like build a modern day venture capital firm powered on software. It was going to be called Originals VC, hence the name Originalis, which is the name of the startup. And then I ended up coming home to RRE Ventures, where I started my venture career back in 2006, seven. So I'm a GP here and actually building Originalis. RRE is like a founding investor, led the seed round, recruited an incredible team. My head of product is Kwame, who was my co-founder of my last startup. He came out of Squarespace after. I have Rohan, who's my technical co-founder. He came out of Citi. He's a quant. He's also a founder. And then we have this incredible engineering team like Duolingo, Amazon, Expedia, moving at lightning speed. And yeah, we finally came out a couple of weeks ago. We've been building it. I think we've been like tinkering a lot, and this is a hard product to figure out. And I could take a step back if you kind of want to ask more pointed questions, but like venture is like it's kind of like messed up, right? Like it's like the most like
In
unstructured
many
asset.
ways, which one are you referring
In
to?
many ways, it's like beautiful because we're like the tastemaker, right? Like what we invest in ultimately becomes what everyone uses. But it's like it's so unstructured, like it, the unstructured data, unstructured and non-repeatable processes. Like you go to a Monday partner meeting and it's like, oh, the CTO may need to get fired, or like the company's running out of money, or like there's this hot deal and you have 2 days, right? Like, so it's just a lot of stuff. And I think if you could like productize like 80% or so, like you solved a really hard problem, like a really, really hard problem. So I would say in earnest, we prototyped a lot of stuff up until April of last year, but it really when our founding engineers came on in April last year that we really started building. And I had to like make a very strategic decision, like which of these sort of core jobs of a VC am I going to start with,
Right.
right?
And
See,
that's what I'm
pick.
super
Yeah,
curious because there are a lot of sourcing is different from being a board member. They're very, very different jobs.
100%. So like, seeing, picking, winning, building, and harvesting. And it was hard. Like we have a sourcing thing actually I think sourcing will be the last thing that we launch. But we started with something very unique. It's about builder sourcing. We could talk about that later. But I actually made a strategic decision to go with what I knew would have the most objection handling, which is analysis and diligence, right? So if you could automate that pretty deeply, you could like build conviction like faster with depth, right? I think that with things moving so fast, man, all these deals, like if you don't move fast, you're going to lose the deal. But if you move fast and don't do the work, you're going to make a bad decision. So how do you like square that circle, speed and depth, and move really quickly to build conviction? And so,
Well, let me ask you a question
yeah,
about that because one of my coaching clients said to me, yeah, we have voting in our firm, but I just wish it reflected reality. Like if we all just got to vote and then the founding partner of the firm would just vote after, that would at least reflect the way I think it goes. So I'm curious, within firms, there's a lot of politics and soft skilling and all this sort
mhm,
of stuff. So it's interesting to me that you've built tools around that deal process internally, which to me feels like one of the harder things to automate and reflect reality and
right.
also might be the toughest to get people to change behaviors around.
that what you hit on the last point is where I knew I would get like some friction going up. It's like, hey, you're right. I do my analysis my way. I have my own taste and this, and I think that's right. But I think so. I think every firm makes decisions differently, right? I think Founders Fund is like, do not like infringe on my intellectual freedom, right? And then you have firms that are like consensus, and then firms that vote, and some firms that just talk about it, like I trust you, like do the deal. There's also like knowledge asymmetry. You're hunting in a space, and like partners can't really comment about that space, but then they try, and you know. So I think that decision making. The other thing is all of venture is like an edge case, right? This is why it's also a really hard problem. So what we're doing with analysis and diligence is like giving you the information very quickly, absorbing it, using network intelligence, which is like a big part of this, like the backbone of our industry, like enriching your entire network, figuring out who you should do diligence on this with, who's potential customers, potential investors, et cetera, domain experts. And all that information for your granola notes and all that stuff gets automatically pulled into this analysis. We have our own scoring rubric, team, market, product, traction, moat that have their own sub factors that leads up to an overall score. But it gets updated as you get the primary diligence. But then you're sharing that constantly with your team, right? As opposed to like, hey, I met this guy, I like him, I'm gonna do some work, get back to you and do a part. Like they're seeing the stuff come in. So like they're getting into like a prepared mind too. And you're being like more like visible with it while you're doing your work really quickly. You know what I mean? So I
By
think that's a really big part of it.
by the way, you hit on something that I think if you get right is at the core of a lot of sort of network management problems. I
Yeah.
poked around good word a little bit and I just see a lot of these sort of, who do I know kind of
Yes.
platforms. And I think they've all sort of struggled a little bit. And I think the reason why is um, I think graphs are pretty broken. And, who is not really your LinkedIn anymore, or, maybe it is depending on how you use it,
Right. That's right.
right? I just go back to the lesson that when Facebook tried to replicate Foursquare, the reason why they failed is because your Foursquare network was curated based on who you actually wanted to run into in person. And
Right.
your grandma wasn't on there, but she
Right.
was on Facebook. And so you didn't necessarily, nor you didn't want to track her movements, and you didn't want her tracking yours. And so the graph was all wrong. And
100%.
anytime it sort of starts out with like dump all my contacts into something, it's not an accurate reflection of who the network actually knows. And so if that's a piece that you can help a firm figure out who they actually know,
Yes. Yes.
that is super helpful.
Yeah. So, I think I think it takes a practitioner to build this because of things like that, right? I think if you don't understand how networks drive this entire business and how clubby it could be, like you're not going to honor the craft, right? So we spent a lot of time, network intelligence. It's like, I remember going to the first board meeting and Stu was like, don't do that. No one's ever cracked that nut. Like, that's not going to happen. I was like, I think I have to for this thing to really work. I have to do it. Right. So you get like, there's a bunch of things that I realize here. One is like the Dunbar number is actually true. Like you don't like, you may be hunting or have a bunch of founders in a space that I'm hunting in, but I may not know. And when you and I go for coffee, I'm like, oh man, I should have sent you this
You're
deal.
never going to remember
How
it.
often does that happen? Right. All the time. Right. It's impossible. Right. And also you may have built up expertise in a category I didn't know you had either. Oh, we have our own ontology where like we take your network and like we map their strength in sub sectors. So like my friend Lior at Eclipse, a personal investor in the company, like he's done a lot of robotics companies, right? As have I before, but he's done more. But then a founder of a robotics company that took it, raised $100 million, probably knows more than both of us, right? It's a hard thing, right? So we score, we have our own ontology for like these sector mappings. And then based on your activity, which we also have an algorithm for within each of these subsectors, you get like scores, right? And then we cross reference that with like the holy grail, which is relationship strength, right? Like, how many times are we meeting? How many emails are you, what was the depth of that exchange? What do we actually talk about? Did it matter? What's the recency, time decayed, and all this stuff? So now if I'm looking at like a robotics deal, like my founder may come up first because I was a director of the company and we have great relationship strength and all this, then Lior, and then maybe like Shaheen right next to him at Lux, right? And it's like bang, does for diligence, boop, 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 boop. They give their feedback. We get wrapped into diligence notes, updates the memo. The market sucks. The product's amazing. Don't do this, don't do that, right? And that I think is really important. And then you have things that like allow you to strengthen your relationships. Like, oh, I'm going to SF for YC.
Who
Who
should I
should I
see there?
I forget. And then sometimes they be new, right? Hey, these are people that you should probably know. And then it's not just for diligence. It's like maybe now you're leading. It's like, who's writing? I just need like 500K checks now to fill it out. Who's doing that? What's your size? What's your stage? Like, what's your area of interest? And maybe you're later on after you're on the board of company, want to raise a series B. Who's the proper follow on investor? Remember those shared Google sheets that people make? It's like
People still do that.
they still do that. They still do that, right? So networks is like the backbone of the whole thing. And I keep saying this to my team. I wrote a series of blog posts under, I call it AI and the Art of Venture. And there's one in there with network intelligence if you want to go and read it. But yeah, I think at the surface, what we're doing seems like, oh, whatever, I could just hook up Claude or whatever. Trust me, it's
No, I always go through this too with like, I poked around the idea of thinking about building an automatic way for my founders to figure out that sheet, that shared
mm-hmm,
sheet of who they should pitch, right? And I think about that with like stage taxonomy,
mm-hmm,
right?
mm-hmm.
Oh, what stage are these guys? Oh, they're seed. What does that mean? Do they need revenue? Or there are these other weird tags like willing to do weird shit.
Yes,
We
yes.
all know that True and Lux and actually RRE will occasionally
Do
do
weird
weird.
shit. Yeah, I have some weird shit. We just announced Science yesterday. It's a BCI brain computer interface company that I led. Right? It's like what the hell, right? We do weird stuff. People
Right.
that know me know I do weird stuff, but you know,
And you and I know what weird stuff means,
right?
but you can't look up VCs that do weird stuff in Crunchbase or
No, you can't. You
Book
can't.
or any of that sort of stuff.
You can't. And you'll be able to do that here. And if you think about analysis, it's also nuanced, right? So if you're giving like a low traction score to like, I don't know, like an open source company that doesn't have revenue, I think you should probably look deeper. You should look at 4 up to stars ratio. You should look at the growth in the downloads. You should look, right? Consumer. before monetization, look at the engagement, look at like the cohort retention, right? So these are also nuances that are in the analysis, right? Like, don't look at a deep tech company to have like 100 million in revenue. Look if the shit works, right? you know, and then who are the investors that look at it like that, right? So we put a lot of these nuances, but then I remember being up to like three, I still do 3 in the morning, just tearing down stuff, right? That feeds back the system. And we got to like a baseline, but then going back to like everything's at all of the ventures and edge case, when you see it, people be like, I don't, I would score the team or the market higher or lower. That's fine. This is how we get like edge, right? You change it, you tell us your rationale, and we update your memory. And the next time something like that comes in, we know what Charlie likes for that thing. And then that's the only way you could like get scale taste at the edges. Otherwise, it's like impossible, you know?
So, I always used to think about this anytime anybody had a company selling public market signals. And I
Yeah.
would say, why not just keep this to your fund and keep this to yourself and trade? So that had to be a question at some point. You thought about raising a fund just around this, like, why share this with the world? Why create VC parity? Because it's also not a huge space.
Right. So yeah, two great questions that I struggle with myself. Yeah, like why give away your edge? I think, and maybe it sounds a little soft, but like I philosophically, I just think this industry needs it. I'm not trying to help people. I'm just like, I kind of get like annoyed, like how things were, I'm like, and now I'm seeing like
Founders
people,
pitch VCs and they don't hear back and they
like you have to be, our portfolio intelligence is going to make VCs accountable. Like we're going to actually shame people like purposely because the founders are going to be like, you could have teams, right? So you could have like, you have an RRE team, but you got to I have a YC team at my YC investors. You could have a team for like the board and you put the founder in there and you press the easy button on fundraising the A, getting customers, getting talent, and you can see who's doing the work and who's not. Like we need to be accountable to our founders, right? Even like during the deals process, like we all suffer from this, but deals fade and you don't get back. Like it tells you like these deals are fading. Hit the button to pass, boop, 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 and it generates something in your voice, and you edit it, and boo. At least you're doing good by like the founders, and then I think you're making the industry more efficient, like as a like market, like making the market like more efficient. And I think that your edge doesn't really go away because your edge is really your edge, right? Is Vic saying much better than Charlie O'Donnell at looking a founder in the eye and saying, "Are you a freaking killer?" Maybe, maybe not. Like, are we better at one thing or the other? Like, that's never going to really go away. So this isn't really your edge. It does get parity to a certain extent, but remember, the work is generated off of your quality. Like, if you're like, hey, press the easy button for the Series B and you don't freaking know anybody, you don't know anybody. You know what I mean? So,
right.
like it's always like how AI, they say, takes a 10x engineer and makes him a 100x, but like a 2x engineer, they can only make like 5x. It's like that with this system too, I would say. The second thing is I wanted to be a founder. I wanted to build again. It's like I'm in my 40s now and like this is my last act. And I actually, your second question is a very good question. Like this is not like as a VC, I'm like, this is not an attractive TAM. Like it's like we actually ran it, our deck through our platform, right? And it's like 2 billion, like with these other modules. But as you go out to the rest of the private capital stack,
Right.
which is like easier, like that goes back to my initial thing. Like if you could tame this beast, this product problem is really hard. And then it just becomes more easy for the
You
structure.
go to every PE fund,
Yeah.
every search, every private
Yeah.
credit, every
LPs, we have like 2 LPs already using it, right? We had growth funds calling us, but we want to nail this because it's just so hard. I actually think even if it's just this TAM, which it won't be, just nailing the problem because it's so damn hard creates a ton of value. But there's like natural cascading. Like every VC has LPs, and every LP is different from your endowment to your family office. They're not building anything. Our VCs for the first time are builders again, which I'm very happy about. But I caution folks, like a lot of folks are there. I was 3 years ago wanting to hire a developer and do all this stuff. Like you got to build it, you got to maintain it, you got to keep up with all the cutting edge stuff. Like it's going to be really hard to do that. So, but yeah, those are like great questions that I thought about a lot myself. But I think the timing, the market, my startups before my first one, but we met after that lunch. It was like a huge idea too early to market. The one that worked was like a big idea. It was still earlier, but it worked, sold to AOL. It could have been a bigger exit. It could have been like TikTok, right? We had music on videos and shit. But this one, I think the timing is very right.
And the timing of the tech too, because
Yes,
if you're saying that you didn't start hiring for engineering talent until last year, frankly, before that, the tech would not have been there. You would have wasted a lot of
we
build if
would
you
have wasted,
started
like,
building.
my technical co-founder, he built 8 prototypes. So when we hired the founding engineer, we had, like, a baseline of stuff to work with, but it was, like, just so they kinda knew what we were doing. But the real stuff happened then, to your point. Uh,
By the way, on the
you
TAM comment, I think back to I had asked Nabil Hyatt once about TAM in the creator space, just as an example, because they did a Descript.
Hmm,
And I said, how did you ever get there on like the TAM of podcasters or
right,
whatever? And he said they did analysis at Spark and they said, every successful deal that they've ever done, at the time that they did it, the TAM, you would have said no based on the TAM, right?
yeah,
And whether it was like Twitter or Oculus, I mean, what was the TAM of virtual reality and all, zero? It was basically zero,
nothing,
right?
nothing, yeah,
Um, and I find this in a lot of spaces where you think you know who the target customer is, and then as you sort of democratize the tech, like I've been talking to some of my sponsors for events about Harmonic. And I,
mhm,
I posted this today. I'm like, I don't know why sponsors aren't using this because you go sponsor an event and they're like, oh, here's the 400 people who showed up to this. You want to screen them
yes,
figure out who the heck they are, like who raised, who didn't, who previously is a venture-backed founder, like
exactly,
so that TAM is not just the VCs, it's everybody in the ecosystem that is
right.
putting money into trying to find the right founders, there's recruiters, all of that sort of stuff. So the TAM's usually bigger than you think it is for a successful
Yeah,
company.
and I think it takes good founders to, like, unlock those and be really creative about it. Like, you and I talked about network intelligence. I think anyone could use that thing, right? Like,
Right.
come on. Like, that thing is crazy, right? I think it goes back to what I said, even if you think about it just beat C-Town, whatever, it's like because the problems are so hard, you have to build pretty deep stuff. And before you know it, some of that deep stuff is probably applicable to like all these other things you probably didn't even think about yet, right? So I'm actually, not that worried about that. I think that like the thing that I want to like sort of like so the big thing happening right now is VCs are like spinning up Claude and like MCP and like doing the thing. And I just I just want them to focus on finding great deals and like sitting on boards and helping companies, right? It's like fun to do the build stuff, but like you need to like do your job. You're going to add another, to your point, of maybe another slice to your pie chart, right? To like maintain software and all this stuff. Like, I'm not sure. So yeah, it's exciting, man. We launched.
VC is a job that it is very easy to get that pie chart filled without being intentional about
Dude, like new deals, portfolio support,
annual
LP
meeting.
fundraising, firm management. Now, marketing has been a new slice that's been introduced 10 years ago when Andreessen came out with platforms, right? And then there's the platform stuff. Like, my God, dude, like, I had the advantage of the first year at RRE. I told my partners I have one of my slices of my pie chart is small, the portfolio, so that I could use that time. One of my partners is like, yeah, knowing you, that's going to fill up pretty quickly. And it has. So
Cool. So tell me about just current, like, are you actively marketing? Is it like people who are curious can come and try? Like, what is the current
yeah.
status and go to market?
Yeah, we're in general availability now. Basically, I told my team because the cool thing is, how like we're always like, hey, you should back founders with founder market fit. I think we're right because I have it, and I'm like, dude, I could spin this product so quickly. So like last year, my team kept like, hey, when are we going to go to market? I was like, it's not ready. It's not ready. It's not ready. It's right. And like mid December, I was like, I think it's ready. So we're in general availability now. When we announced, wait list is over like 200 firms right now. We're doing 5 demos a week. We already converted a bunch. It's just been a few weeks to paid. And yeah, if people are interested, like, just tell them to hit you up and I'll take them off the wait list because you're my guy. And,
Nice.
and then we'll give them a demo. And we got a lot coming. The first module is analysis diligence powered by network intelligence. It's a lot of workflow automation. Portfolio intelligence is coming right after. It's going to be sick. It's not just like, hey, like how many shares do you own? That's back office. It's like, here's like all the monthly investor updates, all the board decks. Here's how this company's trending. You may want to buy out, like have a great board meeting, right? Automating platform, all that stuff. So this cohort that's coming in, what we're telling them is like, you're going to get an inside look to all the new modules. And so, it's a pretty nice place to be. So yeah, definitely in go to market mode, 5 demos a week, already signing up paid customers, already doing, a bunch of implementations, migrations, white glove service. We spin stuff really fast, feature requests, all that stuff. So yeah,
Do
full
you
on throttle.
Do you ever imagine, one last question before I let you go, a world where I feel like a lot of the sourcing and other kinds of tools are very much like scrape what's publicly available and in your own network, but it always leaves out a certain stakeholder. Do you imagine a world in which at the board meeting, my company's doing so well that I actually upload my signals for general availability, instead of the downloads and whatever numbers people can glean, be like, hey, I'll give you my numbers. I'll give everybody my numbers, not in a public broadcast way, but if
Right.
you're in my space, I will make my authenticated numbers available. And hopefully that signal generates some inbound.
Yes, yes. So the one constituent and probably the most important actor we haven't talked about, which we have very strategic plans for, is the founders. But we want to be very like deliberate about how we bring founders into this ecosystem. At the end of the day, this is like a connected network, right?
Right.
So, that's gonna be like the moat, like true network effects when people join up. But like just from our beta, man, we have 10,000 founders in our system. Imagine the founder intelligence we could do on that we're already doing that could be very helpful for them, right? And you could actually imagine like every week, like here's the spotlighted ones with the stats, matching with Charlie, matching with Andrew B, but obvious because he likes this stuff at this stage, at this stuff. And then so you have like this interesting founder intelligence module that's going to get overlaid with the sourcing. The sourcing will honor access of networks. It won't be just some data driven scraping thing.
Right.
That's why we're doing it last because we need a little bit, more intelligence.
Critical
And
mass.
then it's going to be like three concentric circles of data fusion, right? So you have like the public data, how's the LinkedIn trending and whatever else you could find. You have like the investor specific data around it. And then you have like the usage data of the system and where people are spending their time that adjusts in real time. And if you fuse all that together with networks overlaid and where people are hunting, it's again not an easy problem. Like then you could kind of like nail all this, on the sourcing side.
Cool. Well, I'm super excited about it.
Yeah, man. Thank you for reaching out, brother. It was great to see you. I was like, oh my guy, he actually pays attention to my shit.
I do. I do. I do. You always got interesting stuff going on. And it's the site that people can sign up.
Originalis.ai and just hit up be original at originalis.ai. And then if you go on wait list, just request a demo and tell Charlie. I could even give you a code or something, Charlie, if you want.
Nice.
Uh, and then yeah, look forward to like, doing the thing.
Awesome. Good luck.
Thank you, brother. Great to see you, man. All right. Take care.